Welcome back to Pump the Brakes. My name is Andre Beckles. I'm an independent financial consultant with Harare Wealth Management based in New York City. And another version of Pump the Brakes. Today is April the 21st that we're recording. And this version is a special version. It's based off of some of the comments that I've gotten from people that are streaming the podcast, comments, questions. So I said I'd change it a little bit and just do it really based on some of the questions that you have. So in this case, the special segment will be market movers, things that make and change the marketplace. But most importantly, as either a new investor, a possible investor, or a very well-tuned investor, you are a market mover. But what I really want to touch on outside of just you, but things that you should look at that move the marketplace. So with that being said, I'll ask this one question, why do people invest? It may seem very rudimental as to, asking such a question, but it's there's a reason why people invest. I like to say in the most simplistic way of looking at things, people invest, let's say, because they have different goals, objectives in their life. But simplistically speaking, the reason that one will invest is because they have money that they like to reallocate for different reasons. We're not a monolith, so there are some people that will invest for one reason, another reason. Sometimes it's based on their age. Sometimes it's based on, as I mentioned, their goals. But let's talk about it. There's not a one size fits all. I generally like to say that I get calls, or I will normally get calls or questions more frequently during the times that there's volatility or negativity inside the economy. People want to then get a gauge as to what they should be doing versus what they're presently doing or what they're thinking about doing with their money. When all things considered are everybody's doing well, or the economy is doing well, most people are kind of like on autopilot. If you're in the plane, let's just get there and get from point A to point Z. But in life, as we all know, I sometimes live off of the theory of Murphy's Law. What can happen will happen, and the economy doesn't happen in a magical sense. It's not Disneyland. Sometimes people say to me, "Hey, I'd like to play with somebody." Well, I kind of take offense to that, because you really don't play unless you think you're in Vegas and you're just putting money on black on red, or you're pulling some lever. It really doesn't work that way. You have to have goals and aspirations. That's what you want to do. But as I go on, you will also hear that I will touch on that word speculation. And in that sense, you may look at it in that sense that you're just taking some risk with their money or playing with their money. But I generally don't believe that anybody plays with their money. So one of the most important things I always like to say, even for my legal team, whether it be for my legal team or whether it be for the governing bodies, as a financial consultant, you have to always think about the golden rule and doing right by your client. And one of the most important things that are always, scrutinized when you don't, or even as you're preparing a portfolio for a client, is suitability. And what is suitability? As I said, every client isn't a monolith, so you have your own goals and aspirations. No one size fits all, but one must analyze the following thing, or the following things. They're discretionary assets that you're most comfortable for investing. I touched on age. That's a different thing. Some people are investing based on their age. They have a longer period of time to invest, or, an older person, let's say if you've just retired, you may still have a long time horizon to invest, but age does come into place many times when you're when you're talking about suitability and risk. Experience, as I mentioned, a person may be a new investor, another person may be a well-tuned investor, uh, another person is, feeling their way through things. So experience does matter. Time horizon to invest is also key. Liquidity, when you may need your money. Will you need your money that you're investing in a short term? And short term for an investor for can for well, how do I say it? Short term for a person may differ by person. I generally have, when I'm speaking to a new investor, whether you're very experienced or not, I have my own time horizons that I try to get people to understand when they're investing inside stocks or bonds or mutual funds that consist of stocks or bonds or other securities, because though whatever the financial instrument is, it has a certain time horizon for you to invest to be realistic as to when dealing with risk, or even if it has no risk. It may be a product that just has a time horizon. Just like if you walk into a bank and you're looking at maybe a CD, well, they may have a 6-month CD, or you may have a 1-year CD, a 5-year CD. The same thing with treasury bills, anywhere from 3 months, 6 months to 1 year, or treasury bonds, 10 years and beyond. So everything has its own time horizon. It has to fit in that box that you're most comfortable with investing your money and your liquidity needs. Risk tolerance, I think, is very simple, but for many, it may not. What are you comfortable how comfortable are you dealing with risk? Some people can show you charts of the market moving this way, that way, or just going that way. If it's just going that way, well, it doesn't look like you're taking any risk. But in the reality of life, there we go through different tranches inside the economy, just like we go through different tranches in life. Life isn't on we're on a tranche that's just going upwards. We deal with various things in our life that are part of our experiences, and that pretty much is the same thing when it comes to investing. Your tax status may come into play, looking at if you're paying a lot in taxes, if you're looking to save on taxes, if you're looking to defer from taxes, those are different things. So suitability is key. Reasons to invest. Well, there are a plethora of reasons, or as I like to say, I picked this word up many years ago down south, buku reasons for people to invest, but let's stick with plethora. Retirement planning. You may be looking to begin allocating money for retirement. You may be in the midst of your working years and you're looking at retirement, or you may be retiring, but you still want to see how your money is going to be managed. So retirement planning is key. A hedge against inflation. Technical terms in one sense or another, but over the past year or two, we all know about inflation because we've seen it at its heights around 10%, due to various factors, including COVID. So you look to do better than inflation. So a great example is if inflation is at 3% and you're earning 3%, well, then your money is losing money. So you're always looking to get a hedge against inflation. Then you may look at your real return on money, where you like to look at inflation minus taxes and what your real return is thereafter. That's a little more technical, but that goes back to the what I mentioned earlier regarding your tax status. So hedge against inflation. Diversification. You don't want to have all eggs in one basket. You look to have assets invested in different areas to take various opportunities to have your money grow over a specific period of time. Educational savings. So whether it be that you're a parent, whether it be for yourself, or whether you're a grandparent or an aunt or a family member and you're looking to put money away for a younger child, so you have educational savings. strategies to reduce your taxable income. It can either be tax-free, tax-deferred, or just strategies, other strategies that help reduce your income by maybe the types of accounts that you're and products that you're looking to invest in. Growth of assets. Are you looking for growth? And then the next, are you looking for supplemental income via interest and dividends? So growth would be more so from stocks, and bonds would be, or other income generating products would be income. So that could be annuities, that could be REITs, also could be real estate, if you're looking at passive income. And then lastly, estate planning. Some people, use that term generational wealth and passing money on to family, vis-a-vis the way that you invest, the way that you look at different tax strategies and financial planning, gifting assets, whether it be in the present or upon your passing. So those are just 9 different areas of how you can invest. Before I go any further, most important, didn't mention it before. You're in here, you're listening. I always like to say, like, share, and subscribe. So whether it be for yourself, you're liking the show because the information that you are attaining is important for yourself, but also maybe for family members or friends or even foes, whatever the case may be. Like, share, and also subscribe, because every time I put out a video, I'm not contacting you to let you know the video's out. I like to say the onus is upon you, because this information is what affects, whether you be a client or non-client, this is what affects your money on a daily basis. So my mom used to say back in the day, and my friend Lisa Spitzer will remind me because I use this saying at times, reading maketh the man. Well, sharing maketh the man or woman. And by sharing and liking and subscribing, it is how you are able to listen to this information, which is free, whenever it is released, or as I said, sharing it with others that want this information. Let's move on. Market movers, pardon me. So another way of things that move the overall marketplace would be economic data. I talked about this in previous videos ever so briefly. There are leading and lagging indicators, so indicators inside the economy. So if we look at leading indicators, they indicate the potential of upcoming changes or trends inside the economy, sometimes before they happen or sometimes thereafter. Thereafter would really be your lagging indicators. They're used by economists, they're used by analysts, but they're used by businesses, and they're also used by investors. So we've touched on some of these points before, and I'm not going to belabor deeply into them, because I do have a part where I'm talking about the most recent economic news. But gross domestic product. Now, we all work every single day, many of us, and if you're not working, you may be buying products and services. So one way or another, we're working inside the domestic economy. So the GDP, or gross domestic product, as it's better known, is the exchanging of goods and services throughout the economy. It's reported on a monthly basis. Unemployment numbers. Past video, I touched on unemployment. What's most important? Well, you get to know about whether it be the weekly or the monthly job gains or losses. You also are able to find out what parts of the economy inside these reports are doing well. Where are you seeing job gains or losses? Also, if you look on a demographic basis, you get to see within the economy where those jobs, what states are doing better than others, or what they're doing within the norm. So you have wages and income that's also reported inside there. So that's important information. That comes out monthly as well. Consumer confidence, otherwise known as the Michigan Consumer Confidence Report. And very simply, it is what it says. It's a gauge to get an idea of what people feel and how they feel about the economy. So the consumer confidence, it's no more, no less than that. That comes out on a monthly basis. Retail sales. how you are spending your money, where within retail institutions. So when I say retail, I'm not just speaking about, let's say, going to Macy's or going to Target or going to Walmart or buying online from Amazon. I'm also talking about retail sales within the car industry. So there's sales in various industries, and that's what the retail sales report uh, is able to stipulate on a monthly basis. Here's a big one because we talk about there not being enough home, affordable homes, whether it be if you're renting or buying. So another leading indicator would be building permits. Well, if you have an idea of how many permits are being generated in a particular municipality or city, those permits are being taken out to either, or generally speaking, to build new buildings or, of course, refurbished buildings. So building permits are very important. Home sales, whether that is positive or negative. One thing that most people have to understand why there is such a crunch, especially in certain cities, is because since the housing crisis in 2007, 2007, 2008, we have never really gotten back to manufacturing, whether it be rental or residential housing, that amount of new starts since that period of time. Nobody would think about it. The only way you know is really in looking at these type of reports. It also illustrates homeowner wealth. You know, if you're able to sell your home at a price, whether it be within line or above line, you know, how housing sales are doing. So that's homeowner wealth. Gives you an idea of construction jobs, real estate supply, insights into retailers and how they're doing. Because let's look at a Home Depot or a Lowe's. They do a lot of commercial business with contractors, just as well as they do a lot of business with individuals. So looking at that information gives you some insight when you look really in the sense of looking at Lowe's or Home Depot, but it gives you an idea when you look at their corporate earnings. So those are some of your leading indicators. Lagging indicators will be corporate profits. Now, corporate profits, I'm going to touch on in just a moment. It really gives you an indication of how the health of a company, you know, whatever industry it may be. It lets you know what profits they're generating, whether net profits after taxes, if they're in line. And it also gives you an indication as to how these companies, if they give a forecast of how they will be doing in the near to distant future. Pardon me. Interest rates, also very important. The gauge, we've talked about interest rates quite a bit, so I won't go that in depth, but just to give you an idea, if interest rates are high, well, you know that it's being done to, excuse me, to slow down the economy, and that can have a ripple effect in so many different ways, from jobs to sales to housing to, you know, because people will realign how they spend their money based on the cost of money. And then lastly, this sore throat. So sorry. Lastly, would be consumer price index, otherwise the best benchmark for understanding inflation. And I touched on inflation in the last video, so I won't go any further. But inflation is key. You know, we talked just briefly about interest rates. So those are lagging indicators. Try and make it through here without coughing too much. Recent economic data that are let's say market movers would be retail sales. So retail sales, this is brought to you by the U.S. Department of Commerce, came out for the month of March on April 15th. So March retail sales increased by 0.7%, that's 0.7, versus an estimate of increasing by 0.3%. That was fueled by primarily by sales at gas stations. And hence, if you looked at the last video, gas prices have gone down just a little since the last time we spoke. I believe the last video was on April 14th, and gas prices have gone up dramatically from their lows. So that means that people are spending more, and that's part of retail sales. Next, another major report that came out this week was U.S. March building permits. I just mentioned why building permits are important. We saw a decline of 4.3% after rising 2.3% in the month of February. This is the lowest since July of 2023. Let's see, single family permits decreased by single family permits for homes decreased by 5.7%. This is brought to you by the U.S. Department of Commerce. That report came out on April 16th. If we then also look 2 days later on the 18th, the U.S. March existing home sales slipped by 4.3%. And the key areas where we saw less growth in U.S. existing home sales would be in places where you normally see growth. In the Southwest and Midwest, where homes are considerably more affordable versus where we actually saw gains in the Northeast. We also saw a decrease in sales in the West, to me a little bit expected because their prices have been very high, and we've also saw that raise in interest rates. So you would see that usually is a telltale sign that you'll see in places where you have houses that cost a lot more. If interest rates pop up a little bit, you'll see sales dropping off many times. So that information was brought to you by the National Association of Realtors. And as I said, that came out on April 18th. Now, here's a technical one. Most people are not familiar with a publication that comes out by the Federal Reserve. It comes out on a monthly basis. I learned about it many years ago, but that's when I was in trading. I worked on the trading desk, and it was one of the data points that I would look at. And the data point is really called the Beige Book. Is the book a Beige Book now? Many years ago it was. Right now it's all digital. And the Federal Reserve publishes this data on a monthly basis, basically to give you a pulse of the market of how the economies are doing throughout the United States. And this comes out on a monthly basis. Is it important to individuals? I'd say it is important to individual investors because you'd like to know the strength of the economy. All these reports really tie into you knowing what is going on. I always like to say that these are things that they should talk about in, maybe sophomore year in high school, definitely if you're at university or even trade school, because you want to know what's going on inside the economy. If you're working, you want to know that because maybe you're looking to change jobs, change careers. You want to know what's going on inside the economy. And then most importantly, if you're retired, you'd like to know this information as well. So the main culprit, well, let me not go into culprits just yet. Let's talk about the positive. The positive is that we still see a stronger economy, and that's being seen in the jobs reports. And you can listen to the previous video out on April 14th. I talk about it there. So jobs are the jobs report was good, which is has been good for stocks. The inverse is that we're still dealing with that nagging inflation. It's still above the 2%, which is important for the Federal Reserve when thinking about lowering interest rates. The economy is still doing well. And it always seems like a oxymoron when they say, "Oh, you need to have something negative to happen for the Federal Reserve." No, you just need the economy the same way you go to the supermarket and you're looking at prices. You need those prices. You need some deceleration in pricing. And that's what the Federal Reserve is looking at. So that's why they raise interest rates to cool off the economy, which is you're the main benefactor there. So that's all of the data points. I touched on interest rates as a lagging indicator. To give you an idea, as I tell you, interest rates have been up. Well, right now, if you were buying a 3 or 6 month Treasury bill, that's the maturity time frame for a U.S. Treasury bill. It's last week it was about 5.12, 5.16. If we look a little bit longer in duration, the 2-year Treasury note was at, this is as of April 17th. It's brought to us by Bloomberg. And that was at 4.99, so 5%. The 5-year US Treasury at 4.67, the 10-year at 4.62, the 30-year at 4.71. So these are all numbers from April 19th, and that's where interest rates are with regards to Treasury. So if you then say, if you're looking at mortgages, you add another point or two on top of, let's say, or three, depending on your credit rating. You're adding another point, anywhere from a point to two, or maybe close to, hopefully not three. But that being said, you're adding those points on, and that's where you're seeing that the price of mortgages for the 30-year. Let's look at the capital markets. How did the markets do last week? So just looking at a few of the benchmarks, the Dow Jones year to date is flat. It's up 0.79%. The S&P 500 is up 4%. The Nasdaq is up 1.8%. The Russell 2000, which is all small companies, that is down 3.9%, and the Russell Mid Cap is up 1%. So we have been higher. We've had a retracement. And the retracement still goes back to the words that I was speaking about as far as speculation. So speculation is that traders and analysts, they have all been looking at when the Federal Reserve will start lowering interest rates. But since the economy is strong and remains strong, there is no need for the Federal Reserve to lower rates at this point in time. Maybe later on towards the end of the year, but it all depends on the strength or weakness that is seen in some of these leading and lagging indicators. Lastly, what is investing? It's the ability to really reallocate assets into financial instruments where you perceive that you will get a financial gain. And talking to people, and I said, well, this is the definition, and this is where the word speculation comes about. You speculate by buying companies or investing inside financial instruments, or even buying properties. It's kind of like if I said to you, here today, if I could tell you today what you're buying a property for and tell you what it would be worth in the future. So if I tell you today you bought a property for $300,000, and then you were able to sell it 30 years from now at $300,000, you would say, no. Even though you fulfill some of Maslow's hierarchy of needs, you had a roof over your head and you were able to get food, and you once again had a roof over your head. Everybody expects some type of profit for their money that they invested. So if you took out a mortgage, you want that not just to be the roof over your head, but you'd like to, in that case, generate some wealth over time. So virtually the same thing when it comes to investing inside security. So if I use it was a lagging indicator. Let's look back. Yeah. If I use the lagging indicator and look at corporate earnings, why is it important for you to take a look? Or, when the news may break, during the day, and they do a business section and they say, hey, such and such company reported earnings today. This is what they were. So if we look again at Maslow's hierarchy of needs, no, I'm not a psychologist, although I play one I think sometimes as a financial consultant. Quarterly earnings are what are being reported right now. I say they're market movers, and I just looked at key industries that sometimes you may want to look at for insight into consumer spending trends. So if you look at one, I mentioned Maslow hierarchy of needs again. I'm not being paid for saying that, but I'm thinking about the roof over your head, the food in your stomach. So we look at supermarkets. So, if we look at some of your larger supermarkets in the United States, well, Walmart is your largest supermarket. Then you have Albertsons. Most people, if you're not on the West Coast with some of my clients that are out there, they may know the name Albertsons. But Albertsons has roughly about 2,300 stores throughout 34 states in the United States. They are the second largest supermarket in the United States. Some of the names are Safeway, Vons, Acme, Balducci Foods, King Foods, Shaw's, etc. Other stores you may look at to give you an idea of what's going on inside the economy. Maybe you look at a Costco, Target, Dollar General. So you have a wide variety to get an idea of, to give you an idea, a little, use them maybe as benchmarks, if you will, as to how people are spending money, because you'll get an idea based on the profits that these companies are making. Online stores such as Amazon, Walmart, and Apple, those are some of your largest online stores, so you can look at that. If you're looking at financial institutions as far as the housing market, you can look at mortgage lenders, Rocket Mortgage or Wells Fargo. Those are some of your largest mortgage lenders inside the United States. If you're looking at the airlines for leisure, to get an idea what people may be doing, not just for business travel, but definitely for discretionary, how people are spending their discretionary money. You can look at airlines in one sense. You can look at, how Delta Airlines, that's your largest airline, American, United, how they're doing when they report their earnings to give you an gauge. Clothing, you can look at Walmart. If you're looking on the luxury end, you can look at Moet, Hennessy, Louis Vuitton, otherwise known as LVMH. They have various prestigious brands from spirits, perfume, high-end fashion. Transportation. My brother's in the transportation industry, so I'd always tell him to pay attention to, how much cargo, whether it be commercial or residential business, that a UPS, a FedEx, or a JB Hunt, the trucking company, what they're doing. You get a gauge of what's being moved. Some people will look at the rails just as well. Automakers, just as well here in the United States, the largest by revenue is Volkswagen, then Toyota, then Ford, and General Motors. So those are some of the areas to look at, movers, key movers, market movers in the marketplace, to give you an idea of what's going on inside the economy around you. Those are questions that were posed to me. How do I get a gauge as to, outside of, looking at some of the data points that you say that, different government agencies look at? Well, you have the corporate earnings, you can look at interest rates, you can pay attention to what's going on in the market. But most importantly, listen to my stream. So again, like, share, and subscribe. This all helps the channel grow and build. It's not a situation where we're looking to make money. It's basically, I like to say, to fulfill that component in the United States where financial literacy is not shared everywhere and for free. So the more that you like, the more that you subscribe, and the most importantly, the more that you share these streams, the better off this channel will do. So with that being said, this is the end of the April 21st version of Pump the Brakes. My name is Andre Beckles. I'd like to say thank you if you've come this far and you streamed and you liked and shared and subscribed. You didn't just do all this and do it for free without doing any of the above. And until I speak to you again, peace be with you. Take care.